Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. President Trump reiterates his demand for help in the Strait of Hormuz, but allies are less than convinced, refusing to get dragged into the war. Iran steps up its strikes on energy infrastructure in the Gulf, with operations at the Shah natural gas fields in Abu Dhabi suspended after a drone attack. Plus, oil jumps as investors keep an eye on the Strait of Hormuz, and Asian equities rally as Nvidia's upbeat outlook for artificial intelligence lifts sentiment. Well, it's just gone 9 a.m. across the Emirates. I'm Junaid in Dubai. It is now day 18 of the Iran war, and once again, more developments to walk through overnight. We're going to get through them in just a moment, but I will say that markets, which evidently seem to focus on one thing at a time, this time around are focused on the more upbeat outlook that Nvidia has given vis-a-vis their AI sales, and that they could hit over $1 trillion by 2027. Just an absolutely mind-boggling number. And that's been lifting sentiment overnight in Asian markets. As you can see, Asia Pacific, the Hanover, pretty resilient today, up 1.3%. So no cautiousness prevailing there. We also had the RBA decision. They hiked rates. It was tight, though, 5-4 on the splits. We'll talk more about that later, too. S&P futures, again, slightly underwater today, down 0.2%, but a better close yesterday, again, shrugging off some of the concerns around the geopolitical and, of course, energy ramifications of what has been happening in this part of the world. Speaking of, take a look at Brent. We are up 2.8%. It was another whipsaw day for the price of oil yesterday, but essentially we are seeing good traction or good support around this triple digits, around $100 here. At one point, we did dip lower on anticipation that the IEA record release would come out slightly faster than had originally been anticipated. But at the same time, with Iran continuing to strike energy infrastructure and the ongoing effective closure of the Strait of Hormuz, we're still seeing upward pressure on energy and broader energy markets as well. And then take a look at two-year yields. Today I put in two-year yields because we are sitting at just shy of 3.7 here, 3.67. And the point is that we have a central bank meeting coming up this week. Obviously, the RBA did hike today. No one's expecting the Fed to do anything this week, but the inflationary pressures have begun to creep up. At the same time, the backdrop of the labor market is still quite weak, or one reflecting a weakening labor market. So the US, obviously, they have a dual mandate. The language and the tone and the messaging is going to be key to watch this week as to whether they actually do flip and sound slightly more hawkish on back of these inflation shocks that are coming. Now, let's also switch over. I wanted to take a deep dive also into some of the local stock market indices, going back to the beginning of the war. And what you can see from this is there's been dispersion and somewhat, I guess, not really that counterintuitive, but actually the Saudi Tadawul is up 4.5% since the beginning of the war. Obviously very energy heavy, and the market's still accounting for the fact that maybe the higher oil prices could benefit Saudi Arabia. But at the same time, you need to think of the production cuts that they've introduced of around 2 to 2.5 million barrels per day per our latest reporting. But then take a look at the blue line. That is the Dubai stock market, down almost 15% since the war began, and actually down more than 20% since its February highs, and does suggest that the financial services sector, real estate, some of the worst performers on the Dubai stock market have been Ahmad, which is the main property developer, are really taking a hit the longer this war goes on. So this is just a snapshot of some of the local stock market indices. You've got the Doha Stock Exchange down 2.3%, and then the Tel Aviv index down 3.3% since the start of the war. Now, let's go back to the latest geopolitical developments. President Donald Trump has reiterated his appeals for other nations to help secure the Strait of Hormuz as the war continues to roil oil markets and global shipping. Trump has voiced his frustration with nations that have been publicly non-committal about helping.
We strongly encourage other nations whose economies depend on the Strait far more than ours. You know, we get less than 1% of our oil from the Strait, and some countries get much more. Japan gets 95%. China gets 90%. Many of the Europeans get quite a bit. South Korea gets 35%. So we want them to come and help us with the Strait.
Allies of the U.S. have deflected Trump's demands, expressing unease about getting pulled into the war in Iran. Japanese and UK officials won't commit to a naval mission, with the EU taking a similar stance.
The discussion on whether we are, also extending this mandate to cover the Strait of Hormuz to go north from the Muscat line, there was no appetite from the member states to do that. As I said, this is nobody wants to go actively in this war, and of course everybody is concerned what will be the outcome.
For more, we're joined by Stuart Livingstone-Wallace, our executive editor for MENA in Russia, and Bloomberg's Dan Williams, live from Jerusalem. Stuart, I want to start with Trump's efforts to build up this coalition to help secure the safe passage of vessels through the strait. Doesn't seem to be yielding a lot of fruits at this point. And I thought it was really interesting. We just heard from Kaja Kallas there from the EU, suggesting that they see this as them being pulled into the war. And I think this is perhaps the perception that he's going to have to overcome.
Yeah, and I think it's a lot more than a perception. I think it's the reality. As far as we can tell, there was virtually no consultation with any of the international allies. The administration has spent many months questioning the utility of NATO, the utility of the European powers, and then decides to start a war in which it now finds itself somewhat, in a difficult, tricky circumstance when it comes to Hormuz. And then it asks them to join that war. And so I suppose from their perspective, there's not a lot of upside here. Now, he is quite correct in saying that the US is far less dependent for its energy supplies than many other nations when it comes to this particular choke point, maritime choke point. But that has been the maritime order really for the last several decades. And, the deal was that the US would guarantee shipping lines in return for which it would have, a preeminent voice in the world. So you understand their reluctance.
Yeah. And Stuart, let's just turn to, again, more developments overnight. More key infrastructure, energy infrastructure within the UAE has been targeted once again by Iran. Walk us through the latest.
So, it's sort of a continuation in some respects of what we've seen over the last several days. So, Fujairah, which is sort of the port in the UAE that would allow shipping to bypass Hormuz, that has, again, had an incident. And you're seeing this right across the region. So, the targets, in effect, have shifted somewhat over the last week, more into sort of the infrastructure side of things. And, that is fairly widespread. So we'll see how this goes over the next several days. And again, that may change again. But you've also, it must be said that the Gulf Arab nations have been, pretty successful in terms of intercepting a lot of these attacks. Yes, a few things get through. Yes, you do have debris that, starts these fires, all over the place. But nonetheless, there's no sign yet that we're going to get a let up, but nor is there a sign yet that it's sort of catastrophic in terms of the impact.
Dan, let's talk about the other parallel front. Yesterday, the IDF announcing that they're expanding their ground operations in southern Lebanon. What do we know about what they're trying to achieve here?
Good morning. Yes, Israel is fully a partner in this US-led war on Iran. But for many Israelis, that conflict 1,000 miles to the east is being eclipsed by the second front of this war, as you noted, the Lebanese front with Hezbollah, an ally of Iran, which had been quiet, but 2 days into the Iran war, reignited that front with a volley of rocket fire against Israel. The Israelis have been building up forces in southern Lebanon dramatically. I was told last week there are around 1,500 troops there. Now we hear it's more than 2 divisions worth. That's upward of 20,000. The official Israeli line is that these troops have been moved in to prevent what they say is an attempt by Hezbollah not just to be firing rockets above Israelis' heads into the Israeli home front, but to send hundreds of fighters to the border to attack frontline Israeli homes. as was the case in fighting of 2023-2024. However, this buffer zone, as the Israelis are calling it, appears to be deepening dramatically, potentially all the way to the Litani River. That's the natural demarcation of southern Lebanon, about 10% of Lebanese territory, where the Israelis ordered out hundreds of thousands of civilians last week in advance of this ground maneuver. It would appear the Israelis are going to reestablish in some form their so-called security zone, the occupation zone that was in place in southern Lebanon between 1985 and the year 2000. The big question on everyone's minds is whether this can be prevented perhaps by a last-minute diplomatic deal. The Israelis have been indirectly in touch with the Lebanese government, which undertook last summer to domestically dismantle and disarm and distance Hezbollah from that Israeli border. That hasn't happened, and it would appear that behind all this martial music, there is still some attempt to get Lebanese authorities cracking down on Hezbollah internally.
Stuart Livingston-Wallace and Dan Williams, thank you so much. Now, oil is jumping this morning on the energy attacks in the Gulf by Iran. Let's discuss further with Junaid Ansari, a Director of Investment Strategy and Research at Kamco Invest. Do you have a scenario analysis that you put together perhaps on where you think oil prices could head to the long indeed multiple attempts and attacks on energy infrastructure sites in the region?
Good morning, and thank you for having me, Jumana. So the best case scenario for what's going on the geopolitical front in the region would be that a gradual reopening of the Strait of Hormuz. So because that is the nerve center for trade in the region and for the passage of crude oil from the region. What would this result in would be a slide in oil prices. We only say slide, but oil prices will not crash. We believe that in the near term, oil prices are not going to go back to the $60 per level. It will continue to remain elevated between $70 and $80 per barrel. And in fact, in the immediate term of a ceasefire or of a resolution of this or stability in the region, it will continue to remain above the $80 per barrel level. And the reason for that is that the crude oil strategic reserves that the globally countries are using, that has to be replenished. That's one. Second, there will also be a hold towards building new reserves, anticipating any kind of attacks, because this brings in a lot of reality check as to how much amount of crude oil is required by each country. So that would cause oil prices to remain elevated, production levels to remain elevated for global oil producers. I mean, if you look at the OPEC producers, the buffer capacity of close to 4.2 million barrels per day, that would unwind. There is buffer capacity with Russia, that will also unwind. We've seen that Russia is being given some concessions by the US to sell their oil to some of their trading partners. So these are some of the things that we're expecting on the crude oil front. We also believe that trade will open in the Middle East region. That will ease some of the inflationary pressure that we are expecting in the near term. And in terms of economic impact, we believe that interest rates are expected to remain elevated. It may also, the central banks may also raise interest rates. We can expect some messaging day after tomorrow after the Fed meeting. But ECB has pretty much said that probably they'll be looking at raising interest rates in the near term. So this is sort of a best case scenario, what could happen.
Okay, let me just go back. Yeah, that seems the best case scenario. But in the scenario where, say, the Strait of Hormuz remains effectively shut for a few more months, how do you see the oil markets reacting, but also the global knock-on effects as well to many of the economies that you just spoke about?
So that is kind of a worst case scenario for us. And although people are talking about crude oil prices, but the price trend in the refined product segment is being enveloped by the news on the geopolitical front on the crude oil side. Prices of jet fuel has doubled in some of the markets. Prices of gas oil also doubled in some of the markets. The bottom of the barrel products are also facing the heat. Petrochemicals, naphtha, fertilizers, these have direct impact on food. So that will also be facing a lot of inflationary pressures. For instance, the shortage of diesel in Brazil has caused soybean prices to go up. So these are some of the immediate impact of the closure of the Strait of Hormuz. Then there is also the rising cost of insurance. I mean, if you look at the vessels passing through the Strait of Hormuz now, the cost has gone up by 5% for them. So in the worst case scenario, inflation is expected to remain very high and in most of these markets. There will be a GDP impact for the markets in the region as well as globally. Yesterday, I believe the ex-head chief economist of IMF, Gopinath, also said that global GDP could be impacted by 60 basis points if because of what's happening in the Middle East. So definitely, Saudi GDP impact will be limited in the region, but for the rest of the region, the impact will be much more severe. And so yeah, these are the things that we're expecting if things to go down south.
Yeah, Junaid, at the top of the show, I did a look back at how some of the key stock market indices of the region have performed since the war erupted on February the 28th. And one thing that stood out to me is the Tadawul index in Saudi Arabia is actually tracking positive since February 28th. Obviously not the case for the likes of Dubai, which is the stock index there is down 16%. What do you make of this divergence?
So there are two key reasons for that, Jomana. One is the share prices of Aramco has, because it has a 15% weight in the TASI index, and Aramco share prices are up since the war. So that is also supporting the performance of TASI at the index level. However, even if we exclude Aramco from Saudi's performance, so how do we do that? We look at the market cap of the Saudi market. So you're right that the market cap of Saudi market, excluding Aramco, is up by 0.7% since the start of the war, and this shows that this reflects basically the relatively lesser impact on Saudi Arabia from the war. That's one. And secondly, Saudi Arabia is able to reroute close to 5 million barrels of crude oil to the Gulf of Oman. So that also is in a way sustaining the Saudi economy. They will, and plus, despite the decline in oil shipments in Saudi Arabia, the increase in prices of crude oil, I think that will offset the overall decline in volumes. So in a way, Saudi may be in maybe lesser impacted, severely lesser impacted as compared to the rest of the GCC market. And this is precisely what is being seen on the index front, on the financial markets.
Junaid, thank you so much for joining us. Junaid Ansari, Director of Investment Strategy and Research at Kamco Invest. Well, still ahead, we talk recession worries and concerns around private credit alongside the global energy ramifications of the Iran war with Jean-Henri Monchau of Banque. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asian equities in the green today as Nvidia's upbeat outlook for AI lifts sentiment, but investor focus remains on ship traffic through the vital Strait of Hormuz, and crude oil is hovering just above $100, as you can see. Joining us now is Jean-Henri Monchau, Banque's CIO. Jean-Henri, I observed at the top of the show that I guess markets can only focus on one thing at a time. And this morning, the story is about Nvidia and the fact that they're projecting revenue of more than $1 trillion by the end of 2027. So is this it then? The concerns around the Iran war have been pushed to the side because of some optimism that has emerged again around the poster child of AI?
Well, I don't think it was purely AI related. I think that the market currently expects one thing: to see the number of vessels going through the Strait of Hormuz just picking up. So the fact that we have moved from 2 or 3 vessels to maybe 4 and 5 was enough for the market to start to position for recovery. It looks like investors have been trained to position themselves ahead of a FOMO or a TACO trade, and they don't want to miss the recovery. So that's why we have this optimism in the market for the timing. On our side, we think that it might be too much of complacency. We think that there are other scenarios which are less appealing, and that the market is not positioned for these scenarios for the time being. So AI news coming from Nvidia was probably, let's say, a good reminder to us that it's not just about the Strait of Hormuz, but I think that this is the obsession of the market, and that if there are signs that it's picking up, it's going to be good. If there are signs that it's going to be a long-lasting conflict, then maybe the market will have to readjust.
I mean, I'm just referring to a scenario analysis that our Bloomberg economics team, Ziad Dawood and Dina Svenderi, put together. And this is sort of the framework that I think about things. They've said if the strait stays closed for a month, then you get to oil prices of around 105. If it stays prolonged disrupted for, let's say, 3 months, you can get prices north of $150, $160. Doesn't that change the backdrop for the entire global economy if oil is trading at $150? Just not just in terms of energy impact, but supply chains, and eventually you're going to have to think about demand destruction and the growth hit too.
I fully agree with you, Jomana, and this is why, using scenario analysis, we came to the conclusion that these alternative scenarios, which are going to have some impacts on GDP growth, on the downside, on inflation, on the upside, but also in terms of the tightening of the financial conditions, because the longer we have the dollar going up, the more it's going to tighten also the financial conditions, also through the credit spreads widening. So we have to adjust to the reality that maybe the rosy scenario of January and February, which was Goldilocks, is progressively moving to a scenario which is closer to stagflation, with then the ripple effects leading to recession. So we need to take this into account. And again, as mentioned before, it is not priced by the market. On our side, this is why we have reduced our overweight equity position to something which is closer to neutral, because we don't want to take a bold bet on a very uncertain scenario.
Yeah, I mean, I remember the conversations that we were having, not just with you, but with other investors that I speak to. Asian equities, there was a lot of excitement about the opportunities that Asian equities were going to offer this year. And indeed, for the first couple of months of the year, we saw a huge outperformance there. Do you think the energy crisis changes things because so many of these Asian economies are net oil importers?
I absolutely agree. And also it changes let's say, the outlook on cyclicals. And this is why on our side, when taking some money off the table, we chose to reduce the allocation to Asia, to reduce the allocation to cyclical stocks, while sticking to the US and some of the more defensive sector of the US, because indeed the US is self-dependent. They are net exporters of energy. And this is why, for the time being, they are outperforming the rest of the world, with the exception of China. Now, there is maybe something that could be a bull case for the market that we need to take into account. And we're starting to develop in the sense that maybe we might have no ceasefire between US and Iran during months. But at the same time, some countries are starting to negotiate directly with the US. We saw that yesterday. There were rumors that Italy, Spain, India, and obviously China are in direct contact with Iran, and they try to get their vessels going through to get their oil. So this is maybe the bull case scenario that we need to take into account. But if it's no ceasefire and full blockade, definitely the Asia trade is going to suffer.
Yeah, and let me just pull you in one other direction, because it's a big story in the US, and what we've been seeing is a reassessment of private credit exposure for many of the private equity firms. I wonder as well how that's going to add to the overall picture for risk in the next couple of months, and whether you actually see, the combination of an energy shock and a private credit shock formulating some form of, catalyst for systemic repricing of credit.
This is exactly the point, is that if we take this private credit issue in isolation, it's probably good enough. But on the other hand, if you add this to the fact that the economy is slowing down and that there is also more and more uncertainties with investors, that there is the start of, let's say, a confidence issue, then things can start to snowball. On an isolated basis, these credit issues, these alternative asset management stocks, they are trading down on headlines. The issue is more a distribution issue, the fact that these funds are semi-liquid and that some retail investors suddenly realize that they cannot get all of the money immediately. So it's more a distribution issue than an asset issue. But the more we get into the scenario that the economy is starting to slow down and maybe head into recession, the more pressure there will be on these credit names, and also the lower will be the confidence of investors.
Yeah. Charles Henri, always good to chat to you. Thank you so much. Charles Henri Monchau, Banque's CIO. And coming up, we're going to continue the conversation speaking to Torbjorn Soltvedt, Principal Middle East Analyst at Verisk Maplecroft, on the impact the widening conflict is having on global economies. This is Horizon's Middle East and Africa, our top stories this morning. U.S. President Trump reiterates his demand for help in the Strait of Hormuz, but allies are less than convinced, refusing to get dragged into the war. Iran steps up its strikes on energy infrastructure in the Gulf, with operations at the Shah natural gas fields in Abu Dhabi suspended after a drone attack. Plus, oil jumps as investors keep an eye on the Strait of Hormuz, and Asian equities rally as Nvidia's upbeat outlook for artificial intelligence lifts sentiment. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai this morning, and the Iran war continues. We are on day 18 with ramping up of attempted attacks on key energy infrastructure sites around the UAE. Also a brief suspension of airspace around the UAE overnight too. So we're not talking about things de-intensifying, but in fact, the conflict, the war, still rages on in the backdrop. And what we're seeing, though, is some of these broader markets brushing off some of the most recent developments over here in the region. Asia Pacific, the Hanover, quite positive this morning, up 1.3%. And they're being lifted by some positive sentiment coming through from Nvidia, the poster child for AI. They have said that they anticipate revenue of more than $1 trillion, just an eye-watering number there, by 2027. So that's given a bit of a boost for anything AI tangential in Asian markets. S&P futures also dipping a little bit this morning, cautious tone prevailing, down 0.2%. This after a better close yesterday. And then Brent, we are back above in triple-digit figures, just shy of $103 here, up 2.4%. I spoke about those attacks on energy infrastructure as we continue to talk about still the effective closure of the Strait of Hormuz. So I will say that in the last 24 hours, around 14 to 16 Iran-linked vessels have managed to get through the Strait, and a signal that perhaps Iran is using it as with political leverage for certain countries. As long as they're friendly to Iran, they're allowing the vessels to pass through. So something to keep an eye on there as you think about where this oil is going to go to. And then two-year yields in focus. We've got the Fed meeting this week, up about a basis point today, 3.68, little less than one rate cut priced in by the end of the year from the Fed. But we have an extremely busy week coming up in terms of central bank activity. The RBA we had this morning, we'll talk more about that in a moment. They did hike interest rates. But the question is what the reaction function of these central banks is going to look like, given the world energy shock that we're witnessing. And then let's switch over. I just want to take a look back at some of the key local indices as well and how they performed since the start of the war. And as you can see from this one, the Tadawul has been the relative outperformer since February 28. It is up 4.5%. Though if you adjust it for Aramco, so if you remove Aramco from Tadawul, it's up something like 0.5%. A lot of that outperformance has come from Aramco because of the higher oil prices. And then on the flip side, take a look at the Dubai Stock Exchange, which is down about 14.5% since the beginning of this war. Very services-driven, of course, economy, tourism-driven. Some of the big names that are getting hit are the property developers within the Dubai stock market. Okay, let's dig deeper into how markets in Asia, though, are faring. Min Min Lo is in Hong Kong for us. Min Min, walk us through the price action and, of course, that key central bank meeting.
Yeah, so in Asia, we are seeing pretty strong market performance here. Second day of gains in Asia, and it's really being boosted by the upbeat Nvidia forecast, talking about $1 trillion in revenue at least from AI chip sales alone through 2027. So you can see the Kospi, the TAIEX, all these tech-heavy indexes are gaining as well. But bear in mind, though, that the MXAP index volumes are a little light today, so that suggests that perhaps this is could be a tentative uplift in sentiment, not necessarily a broad-based sort of shift in fundamentals. But you flip the ball, we're diving deep into the Australian assets today because, of course, the RBA hiked rates for a second time. That was largely expected, but it was a split vote, 5-4. And the concern here, if you look at the market reaction, yes, we have Aussie dollar gaining, the stocks gaining, yields coming down, but you can see clearly there is a bit of a bear flattening here with the longer term yields falling faster than the short end, and that suggests that inflation risks is really taking precedence here over growth risks. And we have the board of the RBA judging that inflation could stay higher than anticipated for a longer time, and that's why they hiked the rates today. We're also taking a look at the yen because it's been climbing gradually and inching ever so closer to that 160 level, and this is despite both the BOJ governor and the finance chief making warnings about the FX rates being divorced from fundamentals. The BOJ governor saying that he's open to bond operations in a flexible manner if an exceptional case is reached, and it's really all about that fear around Japan's exposure to imported energy. And if oil prices continue to rise, some analysts say that we could see dollar yen head up towards 165.
Yeah, and then they have to navigate the growth shock from that as well. A difficult one for the Bank of Japan. Min Min Lo in Hong Kong, thank you so much. Oh, for more market insights, we go across to Garfield Reynolds in Sydney. He leads our MLive Asia coverage. Since you are in Sydney, I'm going to ask you a question about the RBA. They hiked interest rates. I was a bit surprised to see that it was such a fine split, 5-4. What sort of knock-on effects do you think the RBA decision is going to have on other central banks around the world? And they have been hiking for a while now compared to others.
Yeah, well, I think, Jumana, there was a clear message from the RBA that a lot of this rate hike was about concerns at the inflation that was already in the economy. And remember, too, that the RBA had led the way for something of a hawkish shift by central banks globally because end of last year you had metal prices soaring on signs of increased demand, partly from the AI boom. So that was driving caution about the need for any more rate cuts or the potential for rate hikes around the globe at a time when oil was down at $60 a barrel or less. So now that oil is soaring, that's heightened central banks' concerns about inflation in general. And the RBA, they sounded a little bit cautious about what might come next. That was perhaps a bit of a surprise, but ultimately, by the end of the meeting, by the end of the press conference, the Australian dollar was back up on the day, and those bond yield declines had become shallower than before. So I think overall that message remains that from central banks' point of view, the immediate impact from the war is we're going to get more inflation, and therefore we need some extra vigilance on that front.
Yeah, the word vigilant takes me back to Jean-Claude Trichet days back at the ECB. I want to ask you about Asian markets and how investors are differentiating between different sectors and different economies that are going to be disrupted or hit by the oil shock that's to come. I thought the handover today was quite interesting, as Minun was just running us through it, because there are still many beneficiaries from the AI segments of these stock market indices. But from your vantage point, where are the winners and the losers emerging?
Well, from my vantage point, I think there are a lot of potential losers across Asia because Asia is so exposed not just to the oil shock itself, but also to things like disruption to LNG supplies, to naphtha. There's a lot of concern about plastics manufacturing getting disrupted by that. But today, equity investors across Asia have looked at Nvidia maintaining its forecast for very strong growth and going, well, looks like the AI boom is still going. Asian shares were on a roll before the war because of the AI boom. Now that they've taken such a steep step down in the initial part of the war, if you've got any optimism that the conflict will peter out at some stage and that things will go back to normal, then you're looking at places like South Korea, Taiwan, maybe some of the Chinese AI adjacent names, certainly some of the ones in Japan, and saying, well, I kind of liked them 2 months ago. They're cheaper now than they were then, so why not buy now?
Garfield, thank you so much for the analysis, as ever. Garfield Reynolds. Well, Finland's President Alexander Stubb says NATO allies have to take Donald Trump at his word when the U.S. president puts the future of the alliance on the line to safeguard passage through the Strait of Hormuz. Stubb spoke with Bloomberg's Francine Lacroix.
I think we now need to de-escalate rather than escalate. So what we probably need is peace mediation. The actual original operation was not discussed with allies, but I'm sure that President Trump is now in conversation with the UK, with France, Germany, the big players.
I think President Trump said that NATO faces a very bad future if US allies fail to assist. How should we take that?
Well, I think, we obviously have to take everything that the President of the United States says seriously. I think the key now is to focus on the alliance and what we do. We are a defensive alliance, which means that we don't do military attacks as such. We're 32 countries. Of course, after the Cold War, we had some peacekeeping missions, but they were always justified through international law and UN charters. So this is quite different from that.
Do you think the US should be helped?
I think those countries that have the capacity and the will to help the United States will do that and should do that. We have to understand that the situation, of course, in the Middle East and in the Gulf region right now is extremely serious. We have Iran that has attacked somewhere between 10 to 13 different countries with missiles and drones, and that's why I think any de-escalatory measure right now would be very useful. Iran's interest, though, the problem here is that Iran seems to have three interests. One is to cause damage to its neighbors. Two is to maximize the harm on the global economy through the oil price. And the third one is to keep up their current regime.
But how does this de-escalate? First of all, who are the right people or the right person to try and help?
Well, we need a ceasefire. So I'm just wondering whether the Europeans or actually India could get involved. We saw Foreign Minister Jaishankar calling for a ceasefire and negotiations just to calm down the temperature and freeze the situation as it is. The problem in these kinds of situations is when you kind of have three players, Israel, the US, and Iran, all with more or less different interests. It's very difficult for them to organize themselves into a peace kind of a situation.
Finland's President Alexander Stubb speaking to Bloomberg's Francine Lacroix there. Now, U.S. President Donald Trump has reiterated his appeals for other nations to help secure the Strait of Hormuz, saying Iran was nearly obliterated, even as the war continues to roil oil markets and global shipping. Trump has also called out NATO and others, claiming they had leaned on the U.S. for, quote, tens of billions of dollars in protection, yet failed to act when asked. And of course, we just heard now from Alexander Stubb saying that they act in a defensive capacity, not offensive capacity. Anyway, joining us now is Torbjorn Soltvedt, Principal Middle East Analyst at Verisk Maplecroft. Good to have you with us. Torbjorn, there's something that I'm trying to get my head around, which is what exactly is Iran's calculus here with the Gulf states? I mean, initially they said they were striking back at U.S. assets, but what has happened over the course of the last couple of days is they are targeting a broad range of infrastructure, whether it's logistics, whether it's the airport, whether it's energy. These are attempted targets, obviously. But it seems as though they're more than looking to just send a message. They're actively looking for to inflict, irreparable damage on these Gulf economies. What is their thinking?
Yeah, absolutely. It's a good question because, we've seen very conflicting statements come out from Iran, from its military leaders and also from political leaders. And I think when you look at Iran's action, what becomes very clear is that the aim is to, as you said, inflict as much economic damage, not just on its neighbors, but on the global economy more broadly. And the easiest way it can do that is of course, to strangle the flow of oil and gas from the region, other critical commodities as well, like petrochemicals, polymers, fertilizers. So all of Iran's actions are very much designed to maximize disruption, survive as long as possible, and then try and force the US and Israel into some sort of accommodation that way by essentially placing as heavy a cost as possible on the military action that has been taken against Iran.
Yeah, I mean, when this started out, we always sort of assumed it was going to be a fight of existential existence for the Iranian regime. But now, again, given the severity of the attacks, or attempted attacks, I should say, because the interceptions have been so high out of these Gulf states, is this not also becoming an existential question for the Gulf states and the foundation of their economic models? At what point will the Gulf states have to rethink and reevaluate their own appetite to protect their base, but also maybe to get involved militarily as well?
Yeah, it's a really, really difficult dilemma. And I think especially when you consider the context, in the run-up to the conflict, if you go back over the last 2.5 years or so, we've seen increasing tensions in the region. And throughout that period, the Gulf states did a very good job of essentially keeping escalating conflict at arm's length. They went to great lengths to kind of remain neutral, to maintain working relations with Iran, and of course the US as well at the same time. And then we've seen that despite all of those diplomatic efforts, despite placing restrictions on the use of US military facilities in the region in operations against Iran, despite all of that, they themselves have found themselves right in the firing line, and they have borne the main brunt of this conflict. So that is why they now face a really big dilemma. Do they take offensive action against Iran and trying to suppress Iran's ability further to launch drones and missiles, as the US and Israel are doing? Or do they try and double down on diplomacy and see if there's another way out of this? But as long as Iran's main strategy remains inflicting maximum economic disruption, then by virtue of being some of the biggest exporters of oil and gas in the world, then they are going to find themselves in the firing line as long as the conflict continues.
And President Trump was speaking yesterday. He's spoken about the military success that the joint U.S. and Israeli operations have had around Iran. He says they've destroyed the Navy. They've destroyed anything between 60 to 80% of missile launchers, a good amount of ammunition stockpile. They obviously have eliminated some very senior personnel within the IRGC. But my question to you is, will this be deemed a political victory, even if the U.S. is painting it as a military victory?
I think it's too early to say, really. We're about 18 days into the conflict, and as you say, we've seen some pretty clear tactical success in terms of the U.S. and Israel, dismantling parts of Iran's political leadership, destroying a growing number of missile launchers, weakening the Iranian Navy. But at the strategic level, as we're seeing, all Iran needs to do is to launch the odd attack against critical energy infrastructure. Even if we're seeing ships in small numbers going through the Strait of Hormuz, as long as there is that implicit threat against shipping, and we've seen more than 10 ships in the region already attacked. So for Iran, they don't really need to close the Strait of Hormuz. They just need to present enough of a threat to make travel through there prohibitive or too risky. And it's a similar story with energy infrastructure. Even if most of the missiles and drones are being intercepted, if one gets through, it has huge implications for global oil and gas markets. Again, we've seen that in terms of the number of missiles and drones that are getting through. It's falling, but it's enough to really kind of lock this conflict into the same pattern. And right now, there's no really immediate off-ramps from that pattern that we've seen so far.
Okay. Torbjorn Soltvedt, a principal Middle East analyst at Verisk Maplecroft. We're going to leave it there. Thank you so much. And coming up, South African telecom operator MTN's long-planned exit from Iran remains stalled. We hear from the CEO, Ralph Mupita, next. This is Bloomberg. MTN's efforts to exit its stake in Irancell remains stalled. The South African telco has been trying to sell its 49% holding since 2020, but U.S. sanctions and now the ongoing conflict has complicated those plans. CEO Ralph Mupita has told us that the group has no staff on the ground, with the investment effectively frozen for years.
We always say there's phase two, which would be the exit of Irancell. That got complicated by the snapback sanctions that came in May 2018. So that disabled our ability, to exit. But if conditions, arose such that we could do an exit, that's exactly and would be in line with strategy.
Is that something then you put on the plan for 2026?
I mean, the sanctions still exist, so you can't exit. So if we could exit, as I've said before, we would have exited. You have sanctions in place, and obviously Iran is ring-fenced from SWIFT and the international monetary system. Practically and legally, it'll be difficult to effect such an exit. So in many respects, you can see Iran as a completely frozen asset. We don't control it, we don't run it, we don't have secondees there. So it's not practical to be able to do such an action right now.
MTN Group CEO Ralph Mupita speaking to Bloomberg's Jennifer Zabazaja there. Now, coming up, Nvidia CEO Jensen Huang makes a $1 trillion forecast at its annual product expo. We'll bring you the details next. This is Bloomberg. Nvidia unveiled a variety of new products at the company's biggest annual event. The CEO, Jensen Huang, in his keynote address, said he's predicting its flagship AI processors will generate $1 trillion in sales through 2027. Bloomberg's Ed Ludlow has the details.
It's $1 trillion of sales, but between 2025 and 2027. And unlike the forecast we got in October from the DC edition of GTC, it lacks some qualifiers and details. So back in October, when they gave us this $500 billion figure, it was only for Blackwell and Rubin systems. It was for 5 fiscal quarters through the end of calendar year 26. And then we found out later that it also included networking sales. We don't have that level of detail, granularity about the $1 trillion, other than it is 2025 to 2027. But what it does do is push Nvidia's visibility for its systems further into the decade through 2027. It's a cumulative figure. Elsewhere, we got updates on Grok with a Q, on the inference side, and how its technology is being integrated into future systems starting in the second half of this year. We are going to get specific designs for space-based data center, an area that Nvidia is now admittedly pushing into. And they want to push deeper into CPU, right? That's been Intel's stronghold, but they see value in going to that and said that it was addressable market worth multiple billions of dollars to them. Beyond that, this was classic GTC. It was the AI Super Bowl that it always is. And Jensen Huang, in a 2.5-hour presentation, talked about how Nvidia is a necessity at every single layer of the 5-layer AI cake that he often talks about. This is Ed Ludlow for Bloomberg News in San Francisco.
And a quick look at equity futures. Before we round up the show, you'll see that the handover from Asia Pacific has been pretty positive, but for the rest of the indices, we are leaning more cautious, down about 0.5% for the majors and European markets. But that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe.